What's going on, guys? Welcome back to the channel. Welcome back to another video. It's Ron here. Hope you guys are having a very good day. And if you're not, hopefully by the end of this video, you'll feel a little bit better. Well, guys, if you guys are stopping by the channel for the first time, please do your boy a favor. Go ahead and subscribe to the channel and also drop a like. Smash the like button. I would totally appreciate that. Well, guys, I've been living in a house, in this particular house here, for the last few years. And over the last 2 years, I have witnessed my mortgage payment change. And no, my mortgage payment did not go down. Thank you, Fed Chair Jerome Powell, with your infinite rate hikes and endless pursuit to reduce inflation. My mortgage payment has not gone down. In fact, my mortgage payment for the last 2 years, even though I'm carrying a fixed rate, low interest loan, low interest mortgage, my mortgage payment has changed 2 times in the last 2 years. Basically, once a year, almost as if I'm renting. My mortgage payment went up about $150 about a year and a half ago. And then just a couple weeks back, I received a letter from my bank. My bank told me that my mortgage payment was increasing yet again. 2 times, okay? Now think about this, guys. I am not the only person that's getting a letter from their bank, letting them know that, hey, your mortgage payment's going up. And here's the interesting thing. When you go and apply for a mortgage, these banks are looking at your credit worthiness. They're looking at your income, and they're trying to determine whether or not you are worthy of a loan. And a lot of these factors are changing, and they're changing very quickly. Now, we've all seen some of the fallout from the Federal Reserve, but here's something that a lot of people are not talking about: the avalanche of mortgage payment increases that are coming down the pipeline. And this is why I always talk about, the importance of having some liquidity in your investments. I don't want to necessarily be 100% invested in one type of asset. I don't want to be 100% invested in the stock market. Of course, I'm a huge fan of investing in the stock market, investing in ETFs, index funds, mutual funds, a handful of, select stocks. Don't get me wrong. And of course, I'm a huge fan of investing in real estate. But at the same time, it is wise to have some degree of cash on the side for hiccups, to offset stock market volatility, to help shore up any type of gaps in your income if there is a gap in your income. Most of these banks who have issued loans to home buyers, would-be home buyers, in 2022, in 2023, 2021, I know I jumped around all 3 years, right? I could have said that in order, but I didn't. But these banks have approved people for mortgages based on their income at the time and based on their income and their credit. Now, here's the thing. How many people have had their income increase at the rate of your mortgage increase? For example, if you received a 3% raise, hopefully you did. Hopefully you got at least 3% raise. But what if your mortgage payment increased by, say, 5%? What if your mortgage payment increased by 6%? What if your mortgage payment increased by 10% in a year? That would mean that the person who owns the home, the property owner, whether it's a real estate investor or it's your primary residence, would they be able to handle that increased mortgage payment? Now, here's the thing. If you have a fixed rate mortgage, there are 2 factors that can cause your mortgage payment to increase. Number one, your property taxes. Now, if you're like most homeowners here in America, over the last 3 years, your property has increased in value in 99% of America. There may be a few states that have maybe not seen as much property real estate appreciation compared to others, but by and large, most all states have seen a tremendous amount of growth. I don't care if you're in California, Florida, New York, Texas, you name it, Nevada, there has been a tremendous amount of real estate appreciation over the last several years. But with that appreciation and with that newfound wealth that many Americans were feeling, with that newfound equity that has been miraculously built up into the properties that homeowners have been blessed with, it's kind of like a blessing and a curse, that higher value has now allowed your state, your city, your county rather, to reassess your property at the new current value. And what this is doing is this is raising how much tax that they're able to collect from the homeowners. And here's the thing, there's someone asked me this the other day. Is there a state that I can live in where there's no property tax? No. All 50 states have property taxes. In fact, property taxes make up roughly 50 to 80% of the tax revenue in most states. So there's zero chance of property taxes ever going away. Now, of course, some states may have more competitive millage rates and more competitive property tax rates compared to others, but all states are going to have you pay property tax. So even if you paid off your property free and clear, you pay cash for your house, or maybe you paid off your mortgage early, you're still going to be paying property tax. So the other reason why your mortgage payment could have gone up is because your insurance on your property has gone up as well. Think about the build cost. Think about the cost to rebuild your home. If your home were to have experienced a total loss through some natural disaster, a tornado, a hurricane, a fire, an earthquake, whatever the case is, assuming that those events are covered in your homeowner's insurance policy, the homeowner's insurance company, the property insurance company, would need to know that they can afford or be able to cover the rebuild of your property. So what I mean by that is, let's just say you got a property, you bought a house, during the, during the pandemic, and that house was $500,000 at the time. And maybe they wrote an insurance policy for your property based on $500,000. Your annual premium might have been, I don't know, $2,000, right? So you're paying $2,000 a year for insurance to cover your property. Well, fast forward 1 year, your property has gone up to, say, $575,000. So it increased by $75,000. So your property has appreciated by $75,000, and every year your homeowner's property insurance, your real estate property insurance is going to be reviewed, and they'll likely issue a new contract for you to either accept or decline. So if you renew your insurance policy, it's likely at a higher rate, right? Because the property value is higher. It's going to cost them more to rebuild that property. I mean, we've seen lumber prices increasing in Home Depot and Lowe's. So this is, it's to be expected, right? Between lumber prices, labor rates, everything is more expensive, right? So the insurance company has to make sure that they're collecting enough revenue in the form of insurance premiums to cover it. So your mortgage payment likely went up or is going up, if you haven't received this letter yet, for one of those two reasons. Now, that's if you had a fixed rate mortgage. Now, me and my family, we're actually looking to buy a property in Florida. We're going to do Airbnb and VRBO when we're not there. And then that way we would be able to build some, help create some additional passive income and help improve and grow our net worth by having another piece of property in the state of Florida, which would be a vacation rental that we could hopefully, if the numbers work out, which we haven't found a property yet, but we're still looking. If the numbers work out, then we could essentially be able to vacation for free, and we will just block out days throughout the year for us to be able to use the property. And so basically we would take it off of, we would block it off on certain days of the year throughout the summer, maybe some points of the winter. You can't rent it on VRBO. You can't rent it on Airbnb during the times when we want it. And we'll just stay there for free. Well, due to the increased number of properties that have hit the market, those plans have been delayed. Why? Because there's such a huge number of people who have now decided to list their properties on VRBO and Airbnb. The level of competition is so much higher now to be able to get to have a constant flow of renters coming in. Right now, in many parts of Florida, if you're paying retail for real estate at this moment, you're either going to have to make a significant down payment to the point of maybe making a 50% down payment just so that you can, not even cash flow, just so that you can break even every single month. Now, this is going to leave a lot of real estate investors, property owners in that state underwater, because a lot of people are not going to be able to cover their mortgage payments if the amount of rent per night is not enough. In other words, you got 30 days in the month, right? If they're not able to collect enough rent throughout the month at a high enough rate, then these property owners are going to have to come out of pocket, right? And the rent and the nightly rental rates have been going down. I've been monitoring this market pretty closely. Well, here's the thing, guys. While I was trying to make these numbers work, and I really tried, one of the banks had offered me an adjustable rate mortgage, an ARM. And for all of 6 seconds, I actually considered it. And what's really scary, and I'm not doing it, and I don't recommend it personally, and I'm not a financial advisor. This is not financial advice. I'm just letting you guys know what I've been through. If you have an adjustable rate mortgage, that means your mortgage is adjustable. So as the federal rate, as the prime rate goes up or goes down, thanks to Fed Chair Jerome Powell's announcements, whenever the Federal Reserve raises interest rates, this is affecting the prime rate. And banks charge whatever they're going to charge for the loan. In most cases, and certainly with the mortgages, they charge prime rate plus a certain amount over that. This is basically how they're able to make a profit. The banks are making a profit either off of the savings and deposits that account holders put into the banking system, or credit cards, or any of these other various methods of generating income for the bank. But here's the thing. We talked about property insurance affecting your mortgage payment. We talked about your property taxes affecting your mortgage payment. In both cases, for me, this is why my mortgage payment went up the last 2 years in a row. But a third factor that will affect a lot of people, and I don't know the stats on how many people have these adjustable rate mortgages, but unfortunately, it's very high. And if you have one, or if you know someone who has one, they really need to be watching this video, and they really need to be preparing for what's coming down the pipeline, because they could literally get hit in the face the next time they go in their mailbox and they see a letter from their bank saying that their mortgage payment has gone up. And it might not just be $200 extra per month. And I'm not saying like only $200, because, depending upon your financial situation, an extra $200 could literally make or break your finances. But just imagine, my mortgage payment went up an extra $250 per month as of a few weeks ago. But I have a fixed rate mortgage. So just imagine if I had an adjustable rate mortgage. Now, our mortgage is less than 3%. Today, mortgage rates are roughly 6%. So I could potentially have, been in a situation, and not just me, anyone who has an adjustable rate mortgage could literally have seen between the increase in property values affecting homeowners insurance and property taxes, or property tax. They could literally see their mortgage payments going up $500 to $1,000 a month on their mortgage payment. Can you imagine? Like, you're going to feel that. An extra $1,000 a month for your mortgage payment unexpectedly, an extra $500 a month. It's almost like if your property appreciated too quickly, it may become too expensive for you to continue to live there. And that's not even fair, is it? And this is why it's so important to have multiple streams of income and the ability to increase your income to offset these expenses. This is why we always talk about creating, multiple streams of income through side hustles, small businesses, home-based businesses, investing in the stock market, I happen to be a huge fan of investing in ETFs and index funds, because if we look at the growth of the S&P 500 over the last, 50 plus years, we've seen growth anywhere between 8 and 10% compounded year over year. Now, of course, some years is significantly higher than that. Sometimes the S&P 500 really outperforms that average. But then there are other years like 2022 where the S&P 500 underperformed. But this year it actually did pretty good. And right now, if you look at the NASDAQ, you look at the Dow Jones, you look at the S&P 500 right now, the performance so far for this year, we're within 5-6% of all-time highs. Now, what happens with the debt ceiling and how does that affect, is the White House going to ultimately, approve the raising of the debt ceiling? That is going to have a lot to do with how the S&P 500 performs for the remainder of 2023. Now, we only have a few days to find out before we find out what they're actually going to do. I think they're going to raise it, because if the U.S. government defaults on our debt, it's going to be bad. You think personal household debt is high and families have difficulty paying for their car payments and, their car debt, your credit card debt, your housing debt, student loan debt. If the United States were to default, it'd be over. So, this is why it's important to live below your means. Live below your means. Like a lot of my friends were, asking me, hey, you got approved for a lot more of a mortgage than what you used. Why don't you get a bigger house? Why don't you get a more expensive house? Well, here's one reason why you don't do that. Because if I had stretched myself financially to spend as much as the bank was willing to provide, well, what happens when your payment goes up at that point? You're kind of like already at the limit. And then if your house appreciated too fast and then your property taxes and your mortgage payment and your homeowner's insurance went up at the same time, now what? Right? And don't mess around and be carrying all sorts of credit card debt through your American Express card and your Visa card and your MasterCard. You'd be SOL. So what do you do here? Well, number one, you need to look at your expenses. Make sure you have a budget. Like, you have to prepare for these things before they surprise you. So you got to have a budget. You got to say to yourself, hey, how much wiggle room do we have here? And if you don't have enough wiggle room to at least be investing 15% of your income, and I know they say, you should always be investing at least 10%. I'm a huge fan of investing, as much as you can. And the reason being is you want to get to a point where your expenses are ultimately covered from the passive income, the dividends, and the income and interest generated from your investments. That's the goal for me. That's how you reach financial freedom. But along the way, there's bumps in the road. And some of these bumps in the road, they come in the form of a double-edged sword. Well, most people are happy when their home increases in value, but most people are not happy when their home value affects their mortgage payment. So you got to ask yourself, can you continue to afford to live there? And if you can't, you need to say to yourself, what can I do to increase my income? What kind of skills and side hustles can I get going to help increase my income to offset the higher expenses of the mortgage payment increase? Another thing you might want to consider is, hey, what can we sell? Are we driving some cars that are way too expensive, carrying a car payment on them that is causing the whole balance sheet to be out of whack? Or do we need to put the house up for sale and just sell the house and move to a place within the country, somewhere else, relocate within the country to a less expensive cost of living area? These are some things that you need to think about, because these letters from the bank are going out and a lot of people are not going to be ready for it. So anyway, guys, drop me some comments. Let me know your thoughts. If you made it this far in this video, drop a like for the video. Also consider subscribing. Share this video with a friend. And I look forward to seeing you guys on the next one. Be safe.